ஸ்டார்ட் ஆகிடுச்சுல. ஸ்டார்ட். ஸோ வேறு ஐட்டம். So cost sheet. So what is the objective of cost sheet? Stock valuation, profit computation, decision making and control. So in the cost sheet oda objective is stock valuation and profit computation. Okay. Stock cost sheet. So cost வந்து எப்படி classify பண்ணலாம்? Expected cost, unexpected cost. What are expected cost? Expected cost are those costs which will get absorbed in the current year itself. Unexpected cost are those costs which will not except for the closing stock. All other costs will be expired to the amount of cost of goods sold. Okay. So again, expected cost can be a period cost. It is also called as a period cost. Unexpected cost is also known as product cost. What are the product cost? Consists of manufacturing cost, mainly manufacturing cost, direct material, direct labor, direct expenses, production overheads. What is the period cost? What are the examples of period cost? Are those costs of administrative and selling overheads, selling and distribution overheads. So ideally, a company will be having 3 places: factory, admin office, sales depot. Factory will again be classified into store, factory shop, warehouse. Store, factory shop, warehouse. So store la வந்து என்ன இருக்கும்? Store la raw materials இருக்கும். Factory shop la will take on the process of the manufacturing. Warehouse will be a place where the goods will be stored. Okay. So what is in the factory cost la first வந்து என்ன இருக்கும்? ஃபஸ்ட்டு வந்து ஆல்ரெடி போன வருஷம் வந்து பல பீரியடில் வந்து இருந்த ஓப்பனிங் ஸ்டாக் அது கூட பர்ச்சேஸ் பண்ணுறோம். இது ரெண்டும் சேர்ந்து இந்த வருஷம் வந்து கன்சியூம் பண்ணுறோம். ஒரு goods, raw material, opening stock of raw material plus purchases minus closing stock, which would give you what இந்த வருஷம் வந்து இந்த டைமில் எவ்வளோ ரா மெட்டீரியல் கன்சியூம் பண்ணிருக்கோம். இந்த கன்சியூம் ஆன ரா மெட்டீரியல் வந்து அடுத்து எங்கே போகுது? இதுக்குள்ளே போகுது. It goes into a factory shop. Raw material, it is going into a factory shop where it is incurring direct labor, direct expenses and the raw material whatever that has been consumed. இது கூட என்ன இருக்கும்? ஆல்ரெடி போன வருஷத்தோட ஓப்பனிங் பேலன்ஸ் இருக்குமா? அது வந்து ஓப்பனிங் WIP. அதே மாதிரி இந்த வருஷம் இதெல்லாம் யூஸ் பண்ணி என்ன பண்ண போகிறோம்? கூட்ஸை ப்ரொடியூஸ் பண்ண போகிறோம். அந்த கூட்ஸ் வந்து என்ன சொல்கிறோம்? காஸ்ட் ஆஃப் ப்ரொடக்ஷன் சொல்கிறோம். அதுக்கு அடுத்து ஃபுல்லாக ஒரே டைம் இதாக இருக்காது. there may be a closing stock which will be classified as closing WIP. Next, அப்படியே இங்கே வந்து காஸ்ட் ஆஃப் ப்ரொடக்ஷன் வந்து ப்ரொடியூஸ் ஆன கூட்ஸ் எங்கே போகுது? வேர்ஹவுஸ்குள்ளே போகுது. வேர்ஹவுஸில் என்ன இருக்கும்? ஓப்பனிங் ஸ்டாக் இருக்கும், அதேமாதிரி க்ளோசிங் ஸ்டாக் இருக்கும். இது ரெண்டுத்தையும் நெட் ஆஃப் பண்ணி பார்த்தோன்னா எவ்வளோ இருக்கும்? டோட்டலாக காஸ்ட் வந்து காஸ்ட் ஆஃப் குட்ஸ் எவ்வளோ இது பண்ணியிருக்கோம், ப்ரொடியூஸ் பண்ணியிருக்கோம், which would be the sales figure on a cost basis. Okay. ஸோ இந்த காஸ்ட் ஆஃப் குட்ஸ் சோல்டோட அட்மினிஸ்ட்ரேட்டிவ் ஓவர்ஹெட்ஸ், செல்லிங் ஓவர்ஹெட்ஸ் இது சேர்த்தோம்னா டோட்டல் காஸ்ட் ஆஃப் த குட்ஸ். அது கூட ப்ராஃபிட் மார்ஜின் ஆட் பண்ணோம்னா செல்லிங் ப்ரைஸ் பி அரேஞ்ச். ஓகேவா? இது ஃப்ளோ ஆஃப் காஸ்ட். இப்போ அதே ஒரு ஷீட்டாக இது பண்ணோம்னா ஃபஸ்ட் வந்து ரா மெட்டீரியல் கன்சியூம், opening stock of raw material plus purchases minus closing stock. What is this giving? This is giving a direct material consumed. அது கூட அடுத்து ஃபேக்ட்ரிக்குள்ளே போகுது டைரக்ட் லேபர், டைரக்ட் எக்ஸ்பென்சஸ். இதெல்லாம் சேர்த்தா என்னென்னு சொல்கிறோம்னா இது 3 மட்டும், டைரக்ட் மெட்டீரியல், டைரக்ட் லேபர், டைரக்ட் எக்ஸ்பென்ஸ். இது 3 மட்டும் என்னென்னு சொல்கிறோம்? ப்ரைம் காஸ்ட்னு சொல்கிறோம். ப்ரைம் காஸ்ட் கூட ப்ரொடக்ஷன் ஓவர்ஹெட்ஸ் ஆட் பண்ணணும். ப்ரொடக்ஷன் ஓவர்ஹெட்ஸை சேர்த்தா என்ன வரும்? கிராஸ் ஒர்க்ஸ் காஸ்ட் வரும். ஏன் கிராஸ் ஒர்க்ஸ் காஸ்ட்னு சொல்கிறோம்? அங்கே ஓப்பனிங் WIP ஃபேக்ட்ரியில் இன்னும் WIP இருக்குது, க்ளோசிங் WIP இருக்குது. அது ரெண்டுத்தையும் செட் ஆஃப் பண்ணோம். ப்ளஸ் ஓப்பனிங் WIP மைனஸ் க்ளோசிங் WIP. இது ரெண்டுத்தையும் செட் ஆஃப் பண்ணால் நெட் ஒர்க்ஸ் காஸ்ட் ஆர் ஃபேக்ட்ரி காஸ்ட் வரும். இது கூட இன்னொரு 5 லைன் ஐட்டம் எக்ஸ்ட்ரா வரும். இட் இஸ் ஆக்சுவலி a production overhead, but it is showing separately as a cost in the cost sheet, which is quality control cost, factory administrative overheads, factory administrative overheads, research and development cost, primary packaging, and we should less of scrap, sale or credit from recovery of scrap. ಇದೆಲ್ಲ ಸೆತ என்ன வருது காஸ்ட் ஆஃப் ப்ரொடக்ஷன் வருது. காஸ்ட் ஆஃப் ப்ரொடக்ஷன் கூட என்ன சேர்த்துறோம், இந்த காஸ்ட் ஆஃப் ப்ரொடக்ஷன் வந்து எடுத்து எங்கே போகுது, வேர் ஹவுஸ்குள்ளே போய் என்ன ஆகுது, அகைன் செட் ஆஃப் வித் ஓப்பனிங் ஃபினிஷ்டு குட்ஸ், க்ளோசிங் ஃபினிஷ்டு குட்ஸோட செட் ஆஃப் பண்ணுறோம். இதெல்லாம் சேர்த்தா காஸ்ட் ஆஃப் குட்ஸ் சொல்லிட்டு வருது. அது கூட அட்மினிஸ்ட்ரேட்டிவ் ஓவர்ஹெட்ஸ், selling distribution overheads, cost of sales, to which if we had profit, it would come to sales figure. This is the cost sheet format. Understood? Okay.
Yes, as you guys know, yes, you can just closing stock of property gives you direct materials consumed. Correct, guys? Yes, visualize that direct materials consumed. Direct material plus direct labor plus direct expense gives you what? Prime cost. Clear with this? Gives you what? Prime cost. Now, from the prime cost, add your production overheads. You get what? You get your gross works cost. Why are we calling it as gross? Because we are getting to adjust what the WAV cost. Right? Now, gross works cost, add your opening WAV, subtract your closing WAV. You don't get cost of production because institute has done some drama here. Correlation, one relation. Clear with this? So they are just calling it as factory cost or net factory cost or this factory cost. Clear with this? Now you adjust for core addition, one relation, which was originally a part of your new what is core addition, one relation? First the quality control cost, then comes your R&D, research and development cost, then your administration overheads related to production activity, AC unit factory, and then your Coca-Cola example, primary packing cost and core addition, and next one relation. You're ready for ways you do that. Now you get your cost of production. From your cost of production, now it enters your value area, add opening FG minus closing FG. You get your costs. From your costs, add your AOS and SOS. You get your total cost of sales. Cost of sales is nothing but your total expired cost. Are you clear with this? Total expired cost. That is, I told you, your period cost expires fully, no? Right? AOS is so much. That your product cost expires except the cost of goods sold. I told you, remember? Guys, yes. Your manufacturing cost expires except the cost of goods sold. Whereas your non-manufacturing cost expires fully. So typically speaking, my cost of goods sold plus AOS plus SOS, what I'm doing, that is nothing but my total expired cost that can be knocked off against my sales by my profit. That's why your cost of sales is nothing but my expired cost only. Clear with this, guys? So from my cost of sales, you have profit. You get your sales. Guys, are you clear with this? Are you clear with this? Is it required to be markup, guys? Is this required to be markup? Absolutely not. Absolutely not. You just see it's not 1 hour, right? With the right introduction to the subject, we have also completed this particular format of cost sheet. Now any kind of sum that comes in here, you will be able to tackle it. Are you clear with this, guys? Yes, there are certain other adjustments also as we enter into this particular area. We will be finishing it off. Clear with this, guys? Any problem? Any problem here? No. Fine. Now one more thing. If in the exam they are asking you, so prepare a cost sheet clearly mentioning the cost heads. Nothing, don't worry. Cost heads stands for prime cost, cost of production, cost of goods sold, and your cost of sales. Clear with this. These 4 subtotals are called as cost heads. So why I separately mentioned it? Some students spend cost heads. Student teachers that is nothing but a subtotal. Clear with this. In the exam they ask you for cost head. It means these 4 items: your prime cost, right? Your cost of production, cost of goods sold, and your cost of sales. Clear with this, right? Then let's go on to the next one. This is regarding direct expenses. Now, look at this. Direct expense. Actually, what do you mean by direct expense? Any cost that is directly traceable from a unit level, but it does not form part of your direct material and direct labor. This is not direct expense, right? Now, what happens is this we follow only in India because globally there is no concept of direct expense at all. Globally, prime cost refers to direct material plus direct labor. There is no concept of direct expense at all. Everything is equal to the fact that you put it under production only. But in India, we follow this concept of direct expense. There is a separate cost accounting standard that talks about direct expense. Not anyway, the cost accounting standard is not required for CA interview. Now, what they have done is they have given a list of line items that fit into the category of direct expense. Now, this is where again many students find understanding. Generally, if they see a line item in a question, they get confused as to whether this particular line item should be classified as a direct expense or should it be classified under production overhead. This is the biggest issue that many students face. Example: power and fuel, right? You have power cost. Now, power cost. Now, one school of thought says that power cost is a direct cost. If I produce more, obviously proportionately my power cost is also going to increase. Right? Another school of thought says no, power cost should be treated as a production overhead. It is not a direct expense. Which is correct. It's not about direct or not. First of all, this particular direct expense itself is something that is unique in India. Generally, globally, they don't follow the concept of direct expense. But anyways, for the purpose of examination, there are certain things that we need to follow. That is the reason why I have given this particular. Are you clear with this? Right? Now, don't worry in between 2 and 1 options where you need not worry that all these applications will be clear with this. The expenses other than the direct material and direct employee cost. Because incur the right parts of a foreign profit from resources that we directly place in technology used in the matter of cost. Now, they put a list of line items that definitely needs to be considered as direct expense. First, royalty paid or payable for production of operational studies. I gave you an example of multi-study, right? The royalty payments should be classified under what? It should be classified under direct expense. Then, higher charges paid for hiring specific equipment. The word here is specific. Now, you might be wondering, sir, higher charges means what? I'm taking an equipment for rent. If I pay a rent on that particular equipment, how can you say that it's a direct expense? If I own that particular machine, I will provide for depreciation, right? Instead, I'm renting from a person, I'm paying rent, higher charges. How will you say that direct expense is only direct expense? That's the word here is specific. Meaning what? Let us say I am taking up a particular job, right? For me to do that job, I'm hiring a particular equipment. Once the job is over, I will give back the equipment. So now, whatever higher charges I pay for this equipment should be exclusively charged only to that job. Hence, in this case, the direct expense. Are you clear with this, guys? Basically, this whole group will need a job costing sector. Are you clear with this? Right? Are you clear with this? Similarly, if they use the word higher specific charge, higher charges for specific equipment, please make sure that you put it under the category of direct expense. Then, once again, the cost for a product or something specific design and drawing. Design and drawing means what? Suppose, for example, the customer comes and asks a granny. That is the they are the real estate business, right? So first, before they start, before they construct a house, there will be a drawing and all that needs to be done. So for a specific house, if I'm having a particular drawing for a particular job, in that case, now it's clearly the direct cost attributable to that particular job. So I will only classify it as what? I will only classify it as a direct expense. Are you clear with this? Are you clear with this? Right? Then you have what? Again, another thing. Service specific software. See, any value find the word specific, make sure that it fits into the category of direct expense, right? And any other expense which are directly related to production, goods, and services. So they have given a drawing terminology here. But yes, this is what it is. So please make sure that royalty claims are down here, and anywhere they use the word specific and all that, then it fits into the category of direct expense. Are you clear with this? Right? Now, next one. In this chapter, another issue is that which is with respect to valuation of closing FG. Valuation of closing FG. Now, what is this concept of valuation? Now, guys, let us say I have FG, right? Let's say I have an opening stock of FG of let's say 1,000 units at the rate of rupees 10. In the current year, I have produced cost of production. I have produced, let us say, 10,000 units at the rate of 11. Right, guys? I produced 10,000 units at the rate of 11. Now, totally in terms of units, how many units is available for sale? I have a total of 11,000 units available for sale. Correct, guys? Right? What I have done is I have sold out of this 11,000. I have sold 9,000 units, and I have a closing FG of 2,000 units with me. Are you clear with this? Right? I have a closing FG means what? I have not sold 2,000 units. Now, first you tell me, this 9,000 units. Now, will I value it at 10 rupees or will I value it at 11 rupees? Because see, the total units available with me is how much? 11,000. From this 11,000 units, I have taken 9,000 units and I have sold it. Now, I'm selling it. Now, am I taking it from the first lot, or am I taking it from the second lot, or am I mixing everything together and taking it? I have not taken it. How will I know this? Are you clear with this? Or in other words, this is a clear-cut situation where your stock valuation issue comes into the picture. Are you clear with this? Now, to put it in simple terms, the concept of stock valuation comes when two cumulative conditions are satisfied. What are two cumulative conditions? Condition number one, there should be multiple lots of risks. And condition units, right? So per unit, what will be the value? What, you know, tell me this. Per unit, what will be the value? What? 8.909. Okay, so 100 times 1000 divided by 1000 gives you 10.909. Okay, so 10.909 is going to be the per unit value. So what I will do is I will value both the 9000 units as well as the 2000 units uniformly at the weighted average rate of 10.909. Are you clear with this, guys? Are you clear with this? So first of all, understand when the concept of issues valuation, not valuation, when it comes to cumulative conditions, multiple loss of each value different rates. This is when the concept of stock valuation issues will begin. Clear with this, guys? So here I have given some different examples, but it is all the concept is all one and the same. Fine, guys, right? So now let's go to one illustration. This is one popular question that I've seen in the past exam. I think this was one tested for about 10 marks, I guess. So let us just quickly run through it. Now, guys, one more thing. I've given all the solution. That is for that is not to save the time for our discussion, but please don't leave the solution first. Try to attempt it. Take a notebook. Try to scribble something and try to participate. That is when you will get the best learning experience. You don't audit the solution by taking it. No, it doesn't work like that. Right? Take a notebook and start doing it. Start doing it. Don't edit the question. You start doing it. The thinking process should begin. Clear with this, guys. Right? Now, what are they given? Direct material is 50% of the total cost. Direct wages is 30% of the total cost. The direct expense and overheads is going to be 20% of the total cost. And the selling price is given as 2000 rupees. Now, what are they given? Selling price 2000 rupees. Material, wages, the expense and overheads. All the expense components are expressed as a percentage of total cost. Clear with this. Then the next year, the direct material cost will increase by 15%. The direct wage cost will increase by 10%. The profit will reduce by 20% as compared to the previous period with the same selling prices maintained. Prepare the cost sheet for the current and next year. Now, guys, I'm not doing some vanilla questions, easy questions. I'm not doing. I'm giving you some really good questions so that you know it's worth your time. Right? Please try practice. Please try practice. Let us give you 30 seconds time. Just try practice, guys. Do something with yourself, and then anyways, I'm going to do this. Come on, let's do it. Hey, good to see the participants on YouTube as well participating. Good, guys. Good. So happy. So guys, whatever you do, make sure that you're giving your best, making the best use of it. That's all. You're not wasting a single second of your time, especially given the fact that you're just before exams. Make the best use of it. Now, guys, now what are they given here? The selling price is given as 2000 rupees. All the components of cost are expressed as a percentage of cost. So now what they're saying is, in the current year, so direct material is going to be 50%. So let the total cost be X. Direct material 0.5X. Direct wages 0.8X. Your direct expenses always put together is going to be 0.2X, right? And then given that the selling price is going to be 2000. So obviously my profit is going to be how much? 2000 minus X. Are you clear with this? Right? Then any issue here? Any problem here? No. Next, what happens? They are saying in the next year, the direct material cost will increase by 15%. Means what? As compared to the previous year's material cost, the next year's material cost will increase by 15%. Or in other words, the next year is going to be 115% of 0.5x. Are you clear with this? Are you clear with this? Right? Are you guys clear with this? Please, not something that you guys were on the camera. Yes, yeah, guys. Fine. So it's going to be 0.5x. Similar to that, wages. They have said the wage cost will increase by 10%. When they say increase by 10%, it means compared to the previous year. The previous year was 0.8x. Next year is going to be 1% of 0.8x. Going to be 0.8x. Nothing has been mentioned with respect to the direct expense overhead. Continues to be 0.2x. Are you clear with this? And then if you add the enter these meetings, get a total cost of 1.105x. Are you clear with this? Now what they're saying, if the same selling price is maintained, right, my profit will be reduced by 20%. My profit will be reduced by 20%. Now tell me here, how much will be the profit? Guys, is nothing but 2000 minus 1.105x. This 1.105x is nothing but the revised cost for the next year. Guys, right? Now they have said that this next year's profit, 2000 minus 1.105x, is nothing but 80% of the previous year profit. That's why they say the profit will reduce by 20%. Are you clear with this? This is equal to 80% of the previous year profit, 2000 minus x. Guys, clear with this, guys? Clear with this? Look, this is basically, they are giving you things to frame two equations and solve it. Clear with this, guys? Now once you do this and solve, you will get the x value. And once you get the x value, the current year figures and the next year figures can be populated and you can complete the answer. Are you clear with this, guys? Are you clear with this? The most important part is understanding the question, framing these two equations, arriving at the x value. Once you do that, the remaining part is just what they have just plugged the figures and they have just put it up here. That's all. Are you clear with this, guys? Are you clear with this? Here the crux is regarding framing the two equations and calculating x values. Done, guys? Right? Done. Clear with this? Fine. So now let's move on to the next question. Look at the quality of questions they are asking. Now, honestly, the standard at which institutes testing is now beautifully increased. Beautifully increased. So conceptual learning is the way forward. Are you clear with this? So please pay more focus on that. Next, yes, one more small illustration. This was actually as an adjustment. In one example question, they have this as an adjustment in one quick question. So the remaining part of the question was simple. Just this part was alone. The main one is more difficult. So I just made it clear. Look at this. Production overhead is given as 40% of conversion cost. What do you mean by conversion cost? What do you mean by conversion cost? Now guys, conversion cost means all the costs incurred inside the factory except my material cost. Are you clear with this? All the costs incurred inside the factory except my material cost. That is the costs incurred to convert my RM into FG. Right? So when I take the conversion cost, only the costs incurred to convert the RM into FG. Don't take the raw material cost also. Clear with this? Basically in the factory, what are the costs that I incurred? I told you direct material, direct labor, direct expense, production overheads. These four expenses you incur inside the factory. Right? The sum total of these three is called as conversion cost. Are you clear with this? Are you clear with this? Now I also told you that globally direct expense is not considered. Right? But in India alone we consider. If direct expense is given in the question, you can also consider that. If it is not given in the question, you just ignore it. Are you clear with this? That's why here they have mentioned conversion cost is direct wages plus PO. This is the labor and labor they have added. If direct expenses that also needs to be added. Are you clear with this, guys? Guys, are you all able to understand? If they bring the conversion cost, it means what? All the manufacturing costs incurred inside the factory except what? Except your direct material. Are you clear with this, guys? So now what are they given? So the PO is 40% of conversion cost, and they're given that the direct wages is going to be 2 lakh rupees. Calculate PO. Now it's very much simple. If you know what conversion cost stands for, now you can do it. So PO is equal to 40% of the conversion cost is nothing but the direct wages plus PO. If the direct expense is not given, right? So 2 lakh plus PO. Equation PO is the only variable that is discount. So this you can find treatment of special items. Guys, please participate on your chatbots or on by unmuting yourself. Now, look at this. You tell me. I'll give you a line item and tell me where these costs, it should appear in the cost sheet. I'll give you 9 items. You please tell me in which category will this form part in your cost sheet. Where will it fit in? Okay, first one, audit fees. Guys, want to get a solution? Audit fee. Logically think, visualize. So the 3 locations of a company I told you, visualize. Audit fee. This is a management related money. No, without an audit company, not run, right? It's a management economic, right? So you can't run a business without all these things. So audit fee comes under AOH. Scrap sales, separate line item, foreign monetization. Clear this. Now, there's one more way of taking it. Suppose. What happened? I purchased some materials, raw material. I purchased raw material. Now, some raw material got destroyed or it got obsolete and I had to chuck it away. I just scrapped it off. Now, if it is just raw material, as such raw material without processing, the raw material scrap can alternatively be adjusted here by calculating my direct material consumed. Here, you can also reduce. That is by calculating the direct material consumed. Here also you can reduce the direct materials scrapped off. Are you clear with this? Alternative only I say. It is not mandatory. Clear with this, guys, right? So we have given one line item. So in some institute material, direct material scrapped off. They have added one more line item here, and scrap sales of direct material has been inserted here. Reduced by direct material cost, which is nothing as such. Nothing like that. You can look into whether direct material has or not. Guys, clear with this. Guys, clear with this. Fine. Next. Right. Quality control expense. Yes. QC cost. 4 line item, 4 line item, separate line item. Royalty payments is what comes under what? Your direct expenses. Then lab testing cost. Lab testing cost is basically your R&D expense. Again, a separate line item. Abnormal losses. So abnormal losses are not considered. What are they? The time you do process cost, you'll understand. I need you to be knowing by now because you are the revision batch. But anyways, right? So I'll be talking about the treatment of losses when we do process cost again. Not well. Data fee. Come on, guys. Data fee. Yes, administration overheads. Yes, overhead. Then amortization of jigs and fixtures. Basically, jigs and fixtures are nothing but they are also some type of fixed assets. This is a small mention with a relatively lesser thing. Clear with this, right? So it's like depreciation treatment. Overhead. But remember, if they are using the word, if it is being used for a specific job or if it is being used for a specific assignment, in that case, it will fit under the category of direct expenses. Are you clear with this, guys? Are you clear with this? So please be careful. Look at this. Special frame for manufacturing. Clear with this, right? It's coming under direct expenses. R&D expense separate line item. Now here comes the beauty. Material handling cost. Many of you think will be thinking that material handling cost comes under the material cost. No, this comes under what? This comes under production overheads. Why, sir? I told you the 3 locations in the factory. No, I not a company. In the factory, the 3 phases. Your stores, factory shop, and your empty warehouse. I told you, guys. Yes. Now look at this. From the stores, the raw material will have to be transported into the factory. It needs to be transported into the machine. Guys, right? That is what is material handling. Right? That is nowhere related to material cost. It is a material handling cost that fits into the category of UOF only. Are you clear with this, guys? I want you to understand this. I want you to follow. That's very much important for you to know. Right? So that's what comes here as material handling cost. The next one. Bad debts, income tax, dividend, and interest expenses. These are non-operating expenses, never considered in our subject. Are you clear with this, guys? Are you clear with this? Now, income tax, dividend, interest, so bad debts. Some students feel bad debts is a part of SOH, selling overheads. Absolutely not. What do you mean by selling overheads? The cost that you incur to sell your product. Correct? Now, if I know that, bad debts means what? It shows my inefficiency to recover the money post sale. Correct? I made the sale and I have not recovered the money. If I know that I'm not going to recover the money, I wouldn't have made the sale itself in the first place. So it is something that happens post sale, and it talks about your inefficiency. It has nothing to do with the sales activity. It is a post sale expenditure. Nowhere related to our subject. It is not operating. Clear with this, guys? Are you all clear with this? Now, here income tax. You all know income tax is not a leading operating activity. Yes. One student asked me a brilliant doubt. I don't know the name of the student. Sir, in our in accounting AS3, accounting standard 3, there you have this cash flow statement being categorized in 3 aspects: your operating activity, financial activity, and your investment activity. There is your income tax form part of our operating activity, but here you are not saying this. Look here, the objective itself is different. We are strictly talking about the expenses that are related to manufacturing and selling by product. Whereas income tax is a charge on your profit. It is charge on your profit. It has not direct correlation with your operations. Are you clear with this? That is the reason why income tax is not operating activity. It is not considered here. Dividends, interest, and all. So all your finance charges will never form part of our subject. I told you that will come under financial management. Are you clear with this, guys? Yes, very good. Sanjay, someone is saying apple seeds. Very good. Right now, one more thing I will ask you. One more question. So tell me, guys, bank has charged some interest on loan taken. So will it be considered or not in your subject? Will it be considered or not in your subject? Guys, yes or no? Bank has charged an interest, right? Will it be considered? No. Okay. Next, bank charges. Will they be considered? Bank charges. Will they be considered? Bank charges. Will they be considered, guys? Bank charges. Will they be considered? No. Bank charges. Someone answer. Right? Or you or will someone answer this? Bank charges. No, sir. Bank charges will not be considered. No. Bank charges form part of AOH. Look at the last question. So bank charges will be part of AOH. Why, sir? Are you deviating from your own logic? No. I will tell you your thought process. You have thought. Okay. A bank. Why do you go to a bank? Because I want to take a loan. So for that loan, they will charge some money. So for that reason, I'm paying something in the finance cost. No, not at all. Not at all. Banks don't just do this lending activity. First of all, guys, for any business to function, you need a bank account for sure. Correct? Now, to maintain this bank account, every year the bank charges some AMC. You know that your debit card expense, your debit card annual charges. You have this, if you exceeded your number of transactions per day, they will give one charges. SMS charges, right? Net banking charges. Correct, guys? Yes. Checks the number of cash withdrawal you exceed, for that they will charge. Are you telling me are these finance related? No, they are related. They are related to your day-to-day administration. Hence, they form part of AOH. Don't think that if at all the word bank comes into related finance, no. Basic operating bank account itself is actually something related to my, my day-to-day routine administrative activity. So for that purpose, they are charging something. That's why money is the bank charge. I didn't say processing fee for loan. Right? Processing fee for loan, you take it as a finance charge. Clear with this. This was one special exam. That's why I do all these things in the revision batch. We don't have time to waste your time. Are you clear with this, guys? This is why yes, business account maintenance. Correct? Clear with this, guys? Yes. Next, the cost of website maintenance for online sales. Look at this. This adjustment in RTP number 2022 non-bank. Right? Website maintenance for any sales activity. Yes, you take it as a selling expenditure overhead. Clear with this, guys? Then the canteen expenses. Now, guys, it depends on where the canteen is present. If the canteen is present in a factory, I will have AOH. If it is present in a corporate office, it is AOH. If it is present in my in the sales depot, that's what you can SOH. Clear with this, guys? Depends on the location. Right? Primary packing cost. Yes, it's going to be a separate line. Right? Fringe benefits. Fringe benefits means what? So employee related benefits you are giving. Again, it depends on which employee you are giving. If he's a direct worker, fringe benefit for that worker will come from direct wages. Right? If he's going to get indirect worker, that supervisor guy was studying like this now, that's what give you AOH. Guys, it's very simple. It's a very simple thing. Please understand it logically. That's the word. Clear with this, guys? Right? Do not think that there are so many things to remember. If you know the underlying logic, any kind of situation can be handled. Clear with this, guys? The most important that I felt was one is material handling. The other one is a special lower level special transport under your direct expense. Then this bank charges, that was something else actually because at least one is business. Right? Clear with this, guys? Clear with this. Fine. Now, we'll be doing a couple of numerical problems here. Right? Maybe the solution is given, but nevertheless, let us do these numerical problems. Good sums I have handpicked in such a way that it predominant.
Okay. So ideally concept is clear. I need to check on the sums now. Bravo.
அரிசி விளையாட ஊற வச்சா
Anda.
இப்போ சோத்து நம்ம இந்த பார்த்துறாங்க. Stock plus purchases. அது அப்படியே இதாக போட்டால் stock plus purchases closing stock gives you raw material consumed. அது போட்டு direct wages, direct expense, prime cost, factory overheads. Stock plus purchases. 26,000 times $13,000 இது பண்ணி ப்ரொடியூஸ் பண்ணியிருக்கணும்ல. பதினெட்டாயிரம் யூனிட் இருக்கும். per annum. Okay. இப்போ per monthனா per month per annum இருக்கிறதெல்லாம் கன்வெர்ட் பண்ணி per month நோக்கிட்டு அதுக்கப்புறமா இது பண்ணணும். percentage plus 46,000 $1,000
green. Not a 50,000. Pretty good sum. கொஞ்சம் கோலாக சொன்னலாம் பரவாயில்ல. पट्टा साना मटिकरा 10,000 वाला है. தூத்துக்குடி கொத்தனார் தூக்கி போட்டு ஸோ காஸ்ட் ஷீட் இப்போதைக்கு ஃபார்மேட்டு தெரியும், வந்தால் எப்படி அட்டன் பண்ணுறதுன்னு தெரியும். ஓகே, பட் சம்ஸு தெளிவாக பார்க்கணும். கொஞ்சம் கிறுக்கு போக்கான இதெல்லாம் இருக்குது. ஸோ இப்போதைக்கு காஸ்ட் ஷீட்டோட ஃபார்மேட்டும் எப்படி சம்ஸ் வந்து அட்டன் பண்ணணுன்னு தெரியும், ஆனால் சம்ஸு இன்னும் தெரியாது. அதை பார்க்கணும். யாரா நீ? ஃபைன். பிரளயம் துஷ்பிரதம். மோஸ்ட்லி எல்லா அட்டம்ப்ட்லேயும் ஓரளவுக்கு டீசெண்டாக தான் கேட்டிருக்காங்க. ஒரு அட்டம்ப்டில் தான் கிறுக்கு கொண்டத்தனமாக இதில் இருந்து அப்படி இப்படி வரும், இப்போ இருந்து இப்படி வரும் அப்படின்னு சொல்லிட்டு கேட்டுட்ருக்காங்க. இதெல்லாம் கொஸ்டின் பேப்பர் சால்வ் பண்ணும்போது ஒரு வாட்டி பார்த்துக்கிறேன், நோ இஷ்யூ. ஸோ காஸ்ட் ஷீட் ஐ கேன் அட்டெம்ப்ட். முடிஞ்சு. ஸோ ஐடி பேசிக்ஸ் இருக்குது, ஐடி இருக்குது, நேச்சர் ஸ்கோப் ஆஃப் ஆடிட் இருக்குது, காஸ்ட் ஆஃப் கேபிட்டல் இருக்குது. காஸ்ட் ஆஃப் கேபிட்டலுக்கு கூட நோ கூட மாட டிங் சாக் டிங் சாக் டிங் சாக் டிங் சாக். பெஸ்ட்டு பாய், ஆல் தி பெஸ்ட். நன்றி ப்ரோ. பை. ஸோ மக்களே, இன்றைக்கி பிளான் படி இன்னும் என்னென்ன பெண்டிங் இருக்குன்னா, இன்கம் டேக்ஸ் பெண்டிங் இருக்குது, ஆடிட் இருக்குது, காஸ்ட் ஆஃப் கேபிட்டல் இருக்குது, எஃப்எம் இருக்குது. ஸோ இன்கம் டேக்ஸும் ஆடிட்டும் இப்போதைக்கு முடிச்சிடுவோம். நேச்சர் ஸ்கோப் ஆஃப் ஆடிட் தானே, அதுக்கு ஒரு கொஸ்டினாக வச்சுக்கிறேன். அதுக்கு போடலையா, ஒரு புட்டுறேன். நண்பா ஓ நண்பா, என்னது இது பேர் என்ன, ரிசோர்ஸஸ். டிபி நண்பா ஓ நண்பா. 6973. Verify. Expected questions 26. Save. Start downloads. Save. Yes. Number. Okay. Next, auditing ethics. Old bro. Auditing ethics. Good. Good. நண்பர்களே, இப்போ என்ன ஆச்சுன்னா ஆஸ்பெக்ட் டு பி கவர்ட் இன் ஆடிட். இதுக்கும் என்கிட்ட ஒர்க்கிங்ஸ் இருக்குது. காரோ nature scope and objective of audit. Aspects to be covered in audit. Chapter 1, nature scope and objective of audit. Okay. Chapter 1, nature scope. Control B, size genus Q. Aspects to be covered in audit. So the major topic here is what are the aspects to be covered in audit, whether the FS is matching with the books of account journals or supported by documents, no omissions or duplications or fictitious entries. Info should be clear and unambiguous. Compliance with applicable financial reporting framework should be true and fair. Aspects to be covered in audit. Conformity with the books of account. The financial statement does not the journal entries in the books must be supported by sufficient appropriate evidence. Journal entries must be supported. Ensure that there is no omissions or duplications, entries or fictitious entries in the financial statement. The information presented in financial statement should be clear and unambiguous. Amounts, classification, presentations and disclosures comply with the relevant accounting standards. This financial statement must present a true and fair view of the entity. So, aspect to be covered in financial statement. The financial statement should agree with the books of accounts. The financial statement should agree with the books of entries in the books of accounts. The journals in the books of accounts must be supported by sufficient appropriate evidence. Ensure there is no omissions or omission, duplication, entry or fictitious entry in the financial statement. Information presented in financial statement must be true, must be clear and unambiguous. Among classification, presentations, and disclosure must comply with the relevant accounting standards. Compliance with the financial statement should present true and fair view. What are the scopes of audit and its inclusions and exclusions? Scope of audit. Scope means inclusion. Scopes mean purpose. What is the purpose of the audit? Purpose of the audit is to enhance the confidence in the users of the financial statement by giving an opinion on a financial statement that financial statement in all the material aspects as per applicable financial reporting framework. Scope of audit. Scope refers to the range of which of the purpose of the audit is to the scope. Scope refers to range or something. The purpose of the audit is to enhance the users in the financial statement. The auditor by expressing an opinion whether the financial statement are prepared in all the material aspects in accordance to the applicable financial framework. Okay. Scope of audit should cover all the aspects. Should cover all the aspects of the includes audit should cover reliability of information. The auditor must ensure that the reliable and records and other sources are reliable and sufficient assessment of information through proper tests and procedures. How will reliability of information to assessment of financial information? Okay. Proper disclosure of financial ensure that the auditor ensures that the disclosure of information, transaction summary, evaluation of accounting policies. The audit should cover all the aspects of the entity related to the financial statement. Reliability of the financial information. The auditor must ensure that the accounting records and other sources are reliable and sufficient for preparation of financial statement. The auditor evaluates the reliability and sufficiency of the information by studying the accounting system, internal controls, and by performing appropriate tests and procedures. Break. அதுக்குள்ள நான் எல்லாத்தையும் ரெடி பண்ணி வச்சிட்றேன். are the inherent limitations of the audit? Inherent limitations. Fine, get back with an audit. So, எங்கிருந்தாலும் நேச்சர் ஸ்கோப் அண்ட் ஆப்ஜெக்டிவ் ஆஃப் த ஆடிட். ஸோ ஆடிட்ன்றது என்னதுன்னு கண்டுபிடிக்கிறதுக்கு முன்னாடி ஃபஸ்ட் எங்கேஜ்மெண்ட் தான் என்ன புரியணும். எங்கேஜ்மெண்ட் இஸ் an agreement between an auditor and the client. There are two types of engagement: assurance engagement and non-assurance engagement. Assurance engagement. So what is an assurance engagement? Assurance engagement is issued, opinion is issued, and such opinion is used by third party to perform, to make their decisions. Example, audit, valuation, etc. Whereas non-assurance engagement, no opinion is issued, only actuarial services is provided. So those kind of engagements are called as non-assurance engagement. So in the chapter, in the subject, full-ஆகவே assurance engagement மட்டும் தான் பார்க்க போகிறோம். Okay, so what is an assurance engagement? Assurance engagement is when a practitioner gives an opinion or a conclusion to enhance the confidence in the users of மக்களே. ஒரு 2 நிமிஷம் பிரேக்கு, திரும்ப ஒரு வேலை வந்துடுச்சு. திரும்ப the time, so got time. Okay, what is an assurance engagement? So what is an assurance engagement? An assurance engagement is where the practitioner provides a conclusion to enhance the confidence of the intended users about the evaluation of the subject matter against the criteria. இவ்வளோ பெருசாக இருக்கா கான்செப்ட் தம்மாத்துண்டு கொடுத்துருக்கிற வேர்ட்ஸு ரிமெம்பர்ஸு. An assurance engagement is where a practitioner provides a conclusion to enhance the confidence of the intended users about the evaluation of a subject matter against the criteria. ஸோ இது பெருசு இருக்கா பிரித்து பார்ப்போமா. ஸோ ஃபஸ்ட்டு ஒரு ரிப்போர்ட் கொடுக்க போகிறாரு, அதுதான் நம்மளுக்கு மொதல் இது வரும். ஸோ ரிட்டன் ரிப்போர்ட், an appropriate written report in an appropriate form. A written report is provided containing the conclusion that conveys the assurance about the subject matter. A written assurance report is the outcome of the assurance engagement. ஃபஸ்ட்டு அஷூரன்ஸ் முடிஞ்ச உடனே ஃபஸ்ட் என்ன கொடுக்க போகிறோம், ரிட்டன் ரிப்போர்ட் கொடுக்க போகிறோம். ரிட்டன் ரிப்போர்ட் இஸ் ப்ரொவைடட் கண்டெய்னிங் த கன்க்ளூஷன் தட் கன்வேஸ் த அஷூரன்ஸ் அகேன்ஸ்ட் த சப்ஜெக்ட் மேட்டர். ஓகேவா, ஃபஸ்ட்டு இது முடிஞ்சு. எப்படி இது கொடுக்க போகிறோம் அஷூரன்ஸ் என்கேஜ்மெண்ட்டை, ஃபஸ்ட்டு ரிட்டன் ரிப்போர்ட்டை கொடுக்க போகிறோம். அதுக்கடுத்து யாரெல்லாம் இன்வால்வ் ஆகிருக்கா, 3 பார்ட்டி ரிலேஷன்ஷிப். ஓகே, இது ரிட்டன் ரிப்போர்ட் கொடுக்க போகிறேன்னு சொல்லிட்டு எப்படி கொடுக்க போகிற, based on the sufficient appropriate evidence obtained. A practitioner obtains the sufficient appropriate evidence to form an opinion. The sufficient refers quantity, appropriate refers quality. Evidence providing comfort is considered as a quality. The practitioner obtains sufficient appropriate evidence to form an opinion. Sufficient refers to quantity, appropriate refers to quality. ஓகேவா, இதுக்கு அடுத்து யாரெல்லாம் இருக்கிறாங்க இந்த இதில் 3 பேர் இருக்காங்க. த்ரீ பார்ட்டி டிரான்சாக்ஷன். A practitioner who is an auditor. Assurance engagement involves 3 parties. Provides assurance, that is a broader term. இதுன்னு சொல்கிறாங்க. Responsible party. The party prepares the subject matter. In other words, the management prepares the subject management. Intended users who are going to be using who uses the assurance report to make a decision. Audit. இதெல்லாம் தேவையில்ல. In case of audit, it gives assurance on, relates to assurance on historical information. As a practitioner may also provides non-historical information. ஓகேவா, நெக்ஸ்ட் சப்ஜெக்ட் மேட்டர். எது மேலே நம்ம ரிப்போர்ட் கொடுக்க போகிறோம், refers to the information examined by the practitioner. Example, financial information in the financial statement. Financial information in the financial statement. ஓகேவா, suitable criteria against the benchmarks, so used to evaluate the subject matter. அதாவது ரூல்ஸ் எப்படி நம்ம இது பண்ண போகிறோம் அதை பொறுத்து நம்மளுக்கு இது கொடுப்பாங்க, ரிப்போர்ட்டு கொடுப்பாங்க அப்படின்றது. ஸ்டாண்டர்ட்ஸ் லாஸ் அதுக்கேற்ற மாதிரி பெஞ்ச்மார்க் ஏற்ற மாதிரி யூஸ் டு எவாலுவேட் த சப்ஜெக்ட் மேட்டர். ஸோ வாட் இஸ் அன் அஷூரன்ஸ் என்கேஜ்மெண்ட்? Assurance engagement is where a practitioner provides a conclusion to enhance the confidence of the intended user about the evaluation of the subject matter against the criteria. So, what are the elements? There is a three-party practitioner who issues the report, uh, responsible party who prepares the subject matter, intended users who is going to use the report for making the decision. Okay, what is an appropriate matter? Appropriate matter, subject matter refers to the information examined by the practitioner. Next, against what is going to subject against the benchmark standards, guidance laws to use to evaluate the subject matter. How is going to evaluate and give opinion based on sufficient appropriate evidence? How is going to report in a written report by providing containing conclusion that conveys the assurance against the subject matter. Okay, ಇದು assurance engagement. Next, so in the assurance engagement, one type of assurance engagement is an audit. So what is the objective of the audit? Objective of the audit is to obtain reasonable assurance that is to provide an opinion. Objective.
So what is the objective of the audit?
The objective of the audit is to obtain a reasonable assurance that the financial statements are free from material misstatement due to fraud or error, allowing the auditor to express an opinion and report the findings as per the standards on audit that efforts are prepared in accordance with the applicable financial reporting framework. Opinion and report report the findings as per standards of audit that efforts are prepared in accordance with the applicable financial reporting framework. Okay, so the objective of the audit is to obtain reasonable assurance that the financial statements are free from material misstatement due to fraud or error, allowing the auditor to express an opinion and report the findings as per the standards of audit that the financial statements are prepared in accordance with the applicable financial reporting framework. So, why cannot we give absolute assurance and not only reasonable assurance? Because of inherent limitations of audit. Inherent limitations of audit. What are the inherent limitations of audit? Nature of financial reporting. Management judgments. Preparing financial statement involves many judgments by the management, which may be subject to decisions or a degree of uncertainty. Management responsibility. The management is responsible for preparation of financial statement in accordance with the applicable financial reporting framework, ensuring the effectiveness of internal control. This internal control may not always be reliable due to inherent limitations of the internal control. Example of inherent internal control limitations: a company may require purchase bill reflect a stamp and signature of an authorized person, indicating that the goods have been received. However, if the accountant and the authorized person collude, they can override the internal control. This is an inherent limitation of the internal control. First one, the nature of financial reporting. Nature of financial reporting. Financial reporting involves management judgments. Management judgment can be subjective or a degree of uncertainty. Management is responsible for preparing financial statement as per applicable financial reporting framework and ensuring the effectiveness of internal control. But internal control cannot be always effective. There may be instances there are inherent limitations for the internal controls due to inherent. One of the example: if a company is required to purchase bill reflects the stamp and signature of an authorized person, indicating that goods have been purchased. If the authorized person and the accountant collude, there comes the internal control limitation. Nature of audit procedure. First, nature of financial reporting, along the management or responsibility. Nature of financial audit procedure, practical limitations of audit evidence. On audit evidence, the auditor obtains the audit evidence by performing audit procedure, but he cannot test all the transactions or balance. Instead, he forms an opinion based on sample, which is a practical limitation. Sample can be this thing. Legal limitations on audit evidence. Management may not provide complete information as requested by the auditor. The auditor cannot force the management to give the information. If not provided, the auditor can only report on the matter. This is a legal limitation. Dishonest management. If the management is dishonest or involves in fraud, they may design sophisticated schemes in order to conceal the fraud. They may present a fabricated documents to mislead the auditor, causing the auditor to accept invalid audit evidence. A related party transaction. The entity may engage in a proper transaction with a related party, which may not have actually occurred. The auditor may not detect this, especially if he is unaware of such relationship, or audit procedure do not uncover this issue. So, nature of audit procedure and practical limitation. Auditor obtains practical limitations, legal limitation, dishonest management, related party transactions. So, what is the practical limitation? Auditor obtains evidence by performing audit procedure, perform test on all the transaction. He performs sample, which is an inherent limitation. Legal limitation. Audit. The management may not provide complete evidence as requested by the auditor cannot force the management. This is a legal limitation. Dishonesty management can create sophisticated schemes to conceal the fraud, and the auditor they might present fabricated evidence to mislead the auditor. Related party transaction. Entity may engage in the paper transaction which leads with the related party which may not actually occur. The auditor may not detect this, especially if he is unaware of the audit to such relationship. Next limitation. Audit is not an investigation. Audit is not an official investigation. So auditor cannot guarantee the financial statements are free from material misstatement due to fraud or error. Timeliness and relevance. Over time, relevance of information decreases. And the auditor cannot verify every matter in detail. Balance must be struck between the reliability of information and cost of obtaining. Future events. Future events may change or adversely affect the entity's ability to continue the market changes. New business models, unforeseen events will cause the business to cease the operation. So, what are the inherent limitations of the audit? Nature of financial reporting, management of the nature of audit procedure, auditor audit assess investigation. Audit is not an official investigation. Audit is not an official investigation. Relevance of information. Future events. இப்போ இது வரைக்கும் பார்த்தது audit. What is a review? A review involves a future procedure and gathers sufficient evidence to appropriate with to form a limited conclusion. So there are two types of assurances. Reasonable assurance. Assurance engagement again can be classified into two types: reasonable assurance engagement, limited assurance engagement. Limited assurance engagement. Reasonable assurance provides high level of assurance. Limited assurance provides lower level of assurance. Then there is reasonable assurance. It is performed to elaborate. Reasonable assurance performs elaborate and extensive procedure to obtain appropriate evidence. Performs fewer procedure to compare to reasonable assurance engagement. Draws conclusion. Reasonable conclusion. Draws a limited conclusion. Example: audit. Example: review. Okay, fine. So what is the need for equity? Improves the quality of financial reporting, adding diligent decision making. Ensure that audits are conducted against the global established benchmarks. The global practices improves the quality of financial reporting, aiding decision making. Promote uniformity in audits of financial statement and keep the professional accountant in necessary skills. Ensure the audit quality. In relation to engagement and quality control standard, professional accountants must follow the standards in their engagement. If the specific procedure and a standard is invalid, they must document the alternative procedure and the purpose. They must also document the reason for departure unless it's clear to draw their attention. Disclosures alone does not absolve the accountant from complying with the applicable financial statement. Super round. See exam time table. ஸோ ஆடிட்டு முடிஞ்சு. ஸோ இன்னும் 2 இருக்குது. எஃப்எம்எஸ்எம் இருக்குது. எஃப்எம்மில் இன்னொரு கேபிட்டல் காஸ்ட் ஆஃப் கேபிட்டல் இருக்குது. ஐடியில் பேசிக் இருக்குது. ஓகே, போய் டின்னர் சாப்பிட்டுட்டு வந்துடுறேன். ஒன்றுமில்லை. பரவாயில்லை.